This is the Alternative Investing Advantage podcast from Advanta IRA, where we show you how to explore investments beyond Wall Street and open your eyes to new options for your portfolio. It's time to take control and give yourself the freedom to choose where you invest your money.
Thank you for joining us today on this edition of the Alternative Investing Advantage podcast. My name is Alex Perny. Today on the download, we have seen quite the start to the week with market volatility, mainly focused on the large outage for Facebook products on Instagram, WhatsApp, and Facebook being down for over 6 hours on Monday, causing share price to tumble for Facebook. Mark Zuckerberg seeing almost $6 billion wiped out of his personal net worth due to this issue, and also a whistleblower coming forward for the Department of Justice for corporate practices for Facebook, also causing share prices to take a steep dive, trading at over 5% lower day on day, coming into the Tuesday market open. Now, that's not the only market volatility that we've seen. We've seen quite a bit of sell-off in other tech-related stocks that has continued from previous weeks. So the actual price slump is starting to level off a little bit, but we are still seeing quite a bit of volatility in the tech market. Now, many analysts are pointing to quite a bit of correction coming up. Many analysts have been pointing to this over several years, so we haven't quite seen it yet, but there have been some indicators, namely with rising interest rates and the pullback of the COVID relief Treasury bond buying program that the Fed has implemented. Now, U.S. oil futures build on 7-year highs as supply chain pictures tightens, and we have gold futures retreating a little bit as Treasury yields have been seen to have been climbing as well. Crypto markets have seen quite a bit of fluctuation over the past few weeks. Bitcoin finally getting back into a top market position with $50,000 per coin price being seen, and a new meme coin, Shiba Inu, has gained 50% over the 24-hour trading period of Monday to Tuesday. So seeing quite a bit of movement in the crypto markets, which can be seen as a bit of a reflection of stock market volatility with increasing prices in things like gold and cryptocurrencies. This has been The Download. Today on the What Is, the 403B plan. Many people are familiar with the moniker 401 and then some type of number and letter plan. Most people mainly being familiar with the 401k plan, which is a type of retirement plan tied to your employer that you both make contributions on and build a tax-deferred vessel of money for you to use in retirement. However, the 401k plan being designed for private industry, the 403b plan is tailored for tax-exempt organizations, namely school teachers, administrators, government employees, nurses, doctors, librarians, people in those types of professions is what the 403b plan is aimed for. It's similar in many ways to the 401k plan. Each offers tax advantage way to save for retirement, but investment choices are often more limited in a 403b plan, and 401k plans are simply there to serve private sector employees. The features and advantages of a 403b plan are largely similar to those found in a 401k plan. Both have the same basic contribution limits of $19,500 for 2020 and 2021. The combination of employee and employer contributions are limited to the lesser of $58,000 in 2021, which is up $1,000 from $57,000 in 2020. Both also offer Roth options and require participants to reach the age of 59 and a half to withdraw funds from those types of plans as well. Now, one of the main advantages of a 403b plan is that they are exempt from the rather onerous requirements and oversight of the Employment Retirement Income Securities Act of 1974, which is a large body of regulation that requires testing and a lot of other custodial requirements to be performed as with a 401k plan that are not there for a 403b, making them a much more cost-effective type of plan to administer, helping to bring in retirement plans to the nonprofit and charitable sector. This has been The Download. All right. Thank you, everyone, for being with us today on this edition of the Alternative Investing Advantage podcast. Today, we're joined by our principal owner and founder, Jack Callahan. Thanks for being with us today, Jack.
Thanks for having me, Alex. Excited to be here and join you.
Absolutely. So we like to give a little bit of a background of where we came from. It's always interesting kind of understanding where a business has grown and where it's going. So tell us a bit about your background, Jack. You have a law degree and you maybe kind of shifted away from that. So kind of give us an idea of where you came from with your education and how Advanta kind of got its start.
Yeah, I'm a Seminole by nature. Went to Florida State undergrad, but I did go to Florida for law school. And I'd say it was probably about halfway through my 3 years of law school that I figured out that I didn't want to practice law as a long-term career. I was learning a lot, enjoyed it, but realized that wasn't the direction I wanted to go. I did pass the bar after I graduated law school and maintain my bar membership to this day. But I kind of went more in the direction of numbers. I'm more of a numbers guy, I'd say, with a finance undergrad, and kind of got into financial services and did a tiny little bit of law on the side, but never really went and worked for a law firm or practiced law, I'd say.
Great. So, you come out of college in Gainesville, fresh with a law degree. You moved back down here to Largo, Florida. Tell us a little bit about the origins of how Advanta got its start. We were started back in 2003, correct?
Correct, 2003.
Yeah. So what was kind of the impetus for the birth of what is now Advanta?
Well, as I mentioned, I kind of got into financial services. I was doing financial planning. I became a CFP, certified financial planner, and was working in my partner's tax and accounting office, Doug Davenport, and providing financial services, a little bit of legal work on the side to his clients. And we had quite a few clients in 2000, 2001, 2002, when we just came off of the tech bubble, who were looking for a way to get their investable assets, which were primarily in retirement accounts, invested into the kind of things they knew and understood, like real estate at the time was a booming investment here, especially here in Florida. So we found some companies that did self-directed IRAs, did the research, figured out who would be a good fit for these clients, and referred some clients out to a company in Oakland, California, that was doing self-directed IRAs, and saw how much it helped these clients, and decided to kind of move on from there and take it to the next step.
Great. So, we kind of have the initial origins of Advanta. What kind of things were people starting out with? Was it always real estate? When did we kind of get into some of the different alternatives? Was it right from the beginning, or tell us a little bit about what people were using this service for in the beginning and where it's grown?
Real estate was definitely the hot investment back then, all the way up through 2007, 2008, as we came into the mortgage financial crisis. But there's, from day one, there's always been folks who have thought out the side of the box and wanted to capitalize on some unique and unique alternative types of investments.
Yeah, absolutely. Interviewing some of our other employees, we've definitely looked at some of the more exotic types of investments, which is one of the really cool parts about working here at Advanta. It's not just real estate, or here's an LLC, or here's a trust. We get all the normal stuff and some of the very not so normal things as well. So, we started out, as a different company. I started out as a franchise of Entrust and in our beginnings, and then we moved into becoming Advanta. It's got to be kind of a little bit of a challenging time of going from a franchisee to a wholly owned business. Tell us a little bit about that transition. There's definitely is kind of some hurdles to jump through. I came on right after we had transitioned in 2012. It was the end of 2011 when we became Advanta. So tell us a little bit about that time in our history.
Yeah, it was really where we kind of got to the point where we really realized that we needed to really strengthen our procedures, our policies, and tighten the operations side of things up. We'd gone from a situation where we were limited geographically and where we could market and find new clients, which limited, I'd say, how big our vision was for the company. And by going out and forging our own path forward under the Advanta flag, we opened up the entire country, as we went from 7 counties in the Tampa Bay area to 50 states. And that really meant that we had a much bigger opportunity, which means that in order to be able to service that many more clients, we're going to have to really tighten up on what our policies, procedures, and how we look at things.
Yeah, absolutely. That was one of the things that, I was kind of right in the middle of when we when we switched over. It's just trying to find our identity as a company and really hammer down that. And it's really kind of made something that is, a relatively complex process in most indications. Buying a piece of real estate's not, buying a Snickers or a Twix at your gas station. It's a little bit more complex than that. Then you add in the added layer of, some people call it complexity of using retirement plan funds, having our account manager program and a lot of other things in place that have evolved from that point have been really, really interesting to see. So, throughout the entirety of your tenure here at Advanta, what have been some of those challenges that you've seen, working under, having been with Intrust and now as Advanta, maybe pick out a couple of things that stand out of, some challenges that we've seen and how we've kind of overcome those over the years.
One of the early challenges I recall when I was wearing all the hats in the company, and trying to figure out what do we focus on. You can invest in anything except life insurance and collectibles. So that was, we took a little while to figure out that yes, there's a world of choices, as we like to say, and educating on everyone on what all these different choices was probably not the best use of our time. There's a lot of niche kind of investments that if we're spending our time in educating people on that being an option, we're not going to find that many people who are interested in the weird types of investments that are unique. There's certainly people who are good suited to those unique opportunities, but kind of narrowing down and focusing on the right types of investments that were a good fit for the people we were marketing to was definitely a challenge and something we had to figure out. The fact that it was a brand new service, it wasn't marketing a service that people knew existed and knew they were looking for. An AC company that comes to mind, as everyone knows they have an AC, they know it needs to be serviced, and they just are trying to decide which company they want to go with. Ours was a service they didn't know existed, and so not just educating them on this is an option, it is legitimate, and you could really benefit from this, but also that we're a company that they could trust and to guide them along the way.
Yeah, definitely. It's one of those things where we're looking at it from that perspective. It's, you're right. We do have so many different options, and how do you kind of condense it down to the ones that are going to be most consumed by clients? Everyone wants to kind of hear about the exotic stuff, but at the end of the day, most people are going to focus on kind of a core investing, bucket, if you will. Things like real estate, lending, LLCs, trusts, tax deeds, things like that. So, making sure clients that definitely had the right message, I completely agree with is a tough one to nail down. I think we've really kind of got a good voice now for that. In talking about, some of the strange investments that we've seen, or I should say maybe most unique, when you were kind of wearing a lot of hats, I think that was kind of when we maybe had some of the more unique ones come through. Maybe tell us about a few that you remember from when you were kind of juggling all those.
The one we used a lot in stories that is true. I remember a couple invested in a breeding pair of alpacas, and wasn't even an animal I was necessarily familiar with, or what the commercial viability or reason for them to exist is, but someone did it, and I don't recall how that investment turned out, but that was an interesting one for sure. We've had a client or two have done some cell tower leases that as I recall, turned out pretty well for them. And that was years and years ago. tax liens. We've had some clients who really went out and found some municipalities that were not marketed too heavily and did well with some tax lien investing, which has now become a little bit more popular, a little more competitive, a little bit more of a challenging market at this point. And even with something as common as real estate, the creative way that so many of our clients structure their deals, where it's not just buying a piece of real estate, it's things like, options on a piece of real estate, a equity participating loan where they're lending as a mortgage loan, but the interest rate on the loan is tied to the profit that the rehabber generates on the property. And just we have a very creative mindset among our clients, entrepreneurial and creative, and it's always interesting to see how they structure things.
Yeah, that's spot on. I remember before I came to Advanta, I have a degree in business administration and a concentration in finance. So coming into here with my eyes open, learning all these different things. They don't teach you about equity participation note in your intro to finance class. That was one of the cooler things that I saw, and I remember I actually did a few of the investments back when I was handling investments for clients in the cell tower leases, which were just really interesting to see how those work. I think one was in the back lot of a client owned real estate that was rented by a church and had a cell tower lease in the back parking lot. So I'm like, so you have basically a church in your IRA. It was just so interesting to think about from that perspective. And then, you're right with those tax liens. I never knew what those things were, but I saw someone make almost $1 million on a tranche of tax liens. So, the creative ways that our clients come up with to make money is really a cool thing about what we do here. And, just for the fact that this whole show kind of has its origin in, coming in and, having accounting clients wanting an option for some alternatives to using their retirement is really cool to see how things have evolved and grown over the past many years here at Advanta. But, looking at the past is always kind of an interesting basis for what the future holds. So, with what our clients are doing, there's, again, things get exotic. We have clients investing in things like cryptocurrency now. Where do you kind of see this going? Our basis and our expertise, really were born from real estate. But what kind of things you see going into the future, and what else you see coming into a play that's going to affect Advanta going forward?
That's the interesting thing about this business is the money, as it always does, just seems to find its way to opportunity. So wherever the opportunities are, our clients will be able to move their IRA funds and follow that path. I think real estate will always be, as the saying goes, they're not making any more of it. It's definitely a limited supply, and there will be ebbs and flows and different kinds of markets and residential, commercial. There'll be markets in which rental properties are stronger, and other markets when rehabbing properties will be the hot market opportunities. That's I don't have the crystal ball. I just look forward to seeing where our clients find the opportunities going forward.
Yeah, absolutely. It's especially being in sales here at Advanta, it's always interesting to see what people are going to call and ask us about. But you're right, real estate, always is a common thread. I will always talk to someone about real estate every single week. Some things maybe do come up. You don't get as many cryptocurrency calls when Bitcoin takes a hit, when China outlaws all cryptocurrency transactions. But we always get calls about real estate, and it's really cool to see how people are using our service and taking back that control and investing in tangible stuff besides just securities and the like. But it's really kind of great to get your perspective on all this. Is there anything that you'd like to tell our listeners, that you'd like to leave them with a parting thought before we let you go, Jack?
I back from my days when I was doing financial planning, I just whether it is alternative assets and real estate and the kind of things that we deal with, my belief is that everyone should take some control of their retirement account and their retirement investing, and not stick their head in the sand and turn it over to somebody else. So even if it's going to be stock market type investments, get involved, learn what you're doing, and take some control.
Absolutely. And we'd like to thank Jack for being with us today. I think it's a really great message to put out there to people listening, is that, look at how much control you actually do have of your investing. And if you, don't feel like you have enough, or you want to get some alternatives, let us know. We're always happy to help. Thanks again for joining us for this edition of the Alternative Investing Advantage podcast. Thank you for tuning in to the Alternative Investing Advantage podcast. Tune in next week for more investing tips and strategies.
Want to hear more episodes of the Alternative Investing Advantage? Search podcast at advantaira.com and subscribe.